Good afternoon. This is Chris Robinson, Robinson Ag Marketing with today's post-close grain and livestock comments for today, September 25th, 2025. Well, after 2 days, the selling supposedly is over from Argentina to China. They sold $7 billion tax-free so they could get US dollars back in their country. Exports tax on all exports have been suspended on Monday so they could boost their sales and generate cash. Imagine that. So yeah, they sold a ton of stuff to China. India stepped in and bought some bean oil from them as well. Um, Back home here, Egypt bought some soybean from us, but I think that was the big news. India purchased 300,000 tons of bean oil from Argentina. That's just part and parcel of what happens when you lower those taxes. And supposedly the tax holiday is over. Um, We'll see if it impacts our situation or not. At the end of the day, it's going to increase our carryout by probably 300 million bushels of soybeans. So I don't know how that's not bearish. I mentioned this earlier today when I was on RFD TV. Um, the fact that beans were able to stay positive on the day, 10, 12 and a quarter, up 3 cents. That's got to be a victory on a day like today after 2 days of all that uh, business getting done from Argentina to China. President did have another phone call today with G, which apparently went well, but take it all with a grain of salt. Nothing really matters till they come back and buy our beans. Remember, this is a pretty simple math problem. For decades, we've grown 4 billion bushels of soybeans, and China's taken a billion bushels of them, roughly. Um, and they have just been sitting on their hands. Now, we've had excellent exports in spite of it, but again, it's negatively impacting our carry out, and we'll see. I mean, uh, the rest of the world can come in and buy beans, but who's going to come in and buy a billion bushels? You just saw all that business get done in from Argentina, and I guess that's the biggest question is when are we going to get this deal with China done so we can get our exports back on track? For the day, December corn finished up a penny and a half, 425 and three quarters. Again, anytime we can settle above, I think 420 is a victory. We've been struggling there for a while. Can we go fill the gap at 32 and three quarters up in July? I don't know. Can we go get the 200-day moving average at 440? I don't know. If we do, I made some recommendations today for guys. If you're getting my letter, you'll see them. If you're a client, you'll see them. If you're not, you won't see them. November beans, you know, we have to see $10 hold. If we don't see $10 hold, we're at risk of going back down to the April tariffs low when we hit 970. That would be my concern. 970, 960, and you have to make the decision. Are you worried? Do you want to do anything to protect $10 beans? You can. You can protect $10 beans for the next 30 days for about 10 or 12 cents. It's not bad. And again, it might look really, really good if we fall out of bed and head down to 970. Now, me saying that is not predicting it's going to happen. I'm just pointing out that's the risk. Every time I say that, I get somebody texting me or emailing me saying, "So, is that what you're saying? We're going to 970?" No, I'm saying that is the risk. The risk here is if we roll over. And how do I know that? Well, it's just based on chart patterns. The market likes to go down and retest old lows when we have corrections. So that would be my opinion. There's 40 or 50 cents worth of risk here in beans if you've got them unprotected. Um, Wheat managed a higher settlement on the day, up 7.5 cents. Again, is this a dead cat bounce? Is this the start of something better? Yet the big picture, a soft red wheat back in June was at 616. It dropped all the way down to 507 uh, 3 days ago. Can we get north of that 535 area? That's would be a 25% correction of that dollar nine break. So I really can't get interested in wheat until we get above 550, 560. That would put some pressure on these managed funds who are short across the board. Until then, it's just wheat doing wheat things. Hopefully, we can get some recovery and some continued buying. But it's all going to depend on what happens with, um, if we can get a better handle on when and if we're going to start getting those bean contracts back shipping to China. In the livestock, kind of a mixed day. You had these fat cattle down 2.5, traded as low as 232.92, finished at 234.30, so finished about a buck 40 off the low, but under pressure as well. October down 5. October feeder cattle down 557 on the day, 5.575, settled at 354.05. Again, is the talk that the government's going to get involved and have and pay farmers to retain their heifers that build the herd? Is that already being factored in? Is the check that they're going to write be enough to help farmers to do that, to stay out of the market? I don't know. My experience being on this planet for as long as I have, and watching markets for the past 33 years, lots of times when someone in Washington D.C. that says they have a solution, that solution ends up creating a lot more problems down the road that nobody ever saw happening. So I would watch October feeders. The key is, are we ever going to take out 369 again? That contract high. We settled the day at 54. So 14 bucks away from that high. What's that worth to you? At some point, we could have a bigger correction. You have to remember, November of 2024, a year ago, we were at 245. So to be sitting here at 354 without having had major correction, that is a ton of revenue to protect. I'm in the business of trying to protect revenue for clients until they sell those animals. So I think that this is a great opportunity to set some hedges. I've been saying that for a while. This whole entire thing has been a kind of a case in point for why it's better to use put options for your defensive hedges as opposed to selling futures. If you sell the futures, you do get a one-to-one downside if it collapses. However, if you sell futures and then we rally 20, 30, $40 after you sell the futures, you've left all that profit on the table. So if you're in the business where you're long these animals all the time, it seems to me that might make more sense to use the options because yes, you'll lose the value of what you paid for the option, but you gain the value as the flat price continues to go up. So it's just a conversation that I've had for now 15, 16 years with producers. I'll keep on having it as long as I'm in the business. And if you check out the lean hogs managed to finish a little bit higher in the day, up 50 cents, 88.625 in December hogs. We do have a pig report on Friday. It's nice to see us up near contract highs. We did stutter step a little bit up here at 90 cents, 3 days in a row. We have backed off of that. Not unusual. People like to hedge around numbers like that. We will see Friday after the close what the report says, and then Monday we'll get after it again. If you're concerned about, a correction, and if you're long a bunch of animals, it still makes a good sense, and you can go get very, very nice hedges all the way out 2, 3, 4, 5, 6 months at these levels. So take advantage of it. We'll see if we can ever get some sort of a deal with China so we can stop talking about and sitting here on our hands while Argentina, these other countries, they make the big sales while we're sitting here, hoping for a trade deal. Um, I'm not bearish. I'm not bullish. I understand that the risk ahead is that we do have a bigger crop than everybody thinks. I think the best way to attack this market, not attract, attack, ATTACK. You need to attack it. You need to defend it. And if you're looking for help, give me a call. I have some ideas. 312-638-8868. Have a great night. Thank you very much.